Reversal trades are very helpful kind of trades that can literally save your ass after you took a losing trade. They are also great if you want to participate on a trend or on a strong macro news movement. In this video we will learn what reversal trades are. I will show you the logic behind reversal trades and why they work. I will show you the market scenarios in which you can use them, and I'll also describe detailed rules on how to trade the reversal trades. So those are the reasons why I like the reversal trades, why I think they are so cool. With the reversal trades, you will be able to get your money back after a losing trade. You will be able to jump into a strong trend. This is sort of like a breakout strategy, but it's better than breakout, I would say. And with reversal trade, you will also be able to participate on a strong macro news movement. Before I jump into the reversal trades, let me first go through support becoming resistance setup very quickly. It's a price action setup and it's very closely connected to the reversal trade setup. I know that a lot of you probably know the support becoming resistance setup. It's a widely known setup. It's not something that I invented, and this is how it works. Imagine this is a price chart and this is a price bouncing off some strong area. Let's say that this is the strong area the price jumps off. So this is a strong resistance zone, right? And when the price breaks this line, breaks the resistance and continues upward, the resistance then became a support. Alright, so it's no longer a resistance, but it is a support, and you expect the price to jump off this area. So this is resistance becoming support. It also works the other way. So imagine that this is a price chart and it's bouncing off this line, which is a strong support. When the price goes past the support, and the support then becomes a resistance, and then you expect the price to react this way, jump over the resistance zone, right? So this is support becoming a resistance setup and the resistance becoming support setup. Now, this is a price action setup, and we will be talking about volume setup. So there is not that big difference between support becoming resistance setup and the reversal trade setup. Only the support becomes resistance setup is based on price action, and the reversal trade setup, the logic behind the setup, is based on volumes. And you probably know that I prefer volumes because volumes are, in my opinion, the most important thing. So let me now finally show you how to trade the reversal trades. There are three ways or three market conditions under which you can trade the reversals. So the first case is when the price shoots past volume-based level. At this place I should probably mention that you should know my three setups, my three volume profile setups which I trade. If you don't know them, then I suggest you watch my free webinar. It's on YouTube. I'll put a link to it at the end of this video. So if you don't know my volume profile setups, just click the link at the end of the video and you will learn it quickly. But let's get back to this example. Let's get back to the reversal trades. The first kind of reversal trades is when price shoots past volume-based level. In the picture, you can see a trend setup. You can see a trend right there, volume cluster within the trend. This is setup number 2 from my volume-based trading setups. And usually this level works as a resistance zone. So in this case, I expect a reaction like this. But as you can see, the price just went past the level. It didn't react to the level. It went past the level without any reaction to it. So in this case, you wait for the price to return back exactly to the level and you enter a reversal trade. So if you went short from the level, then you enter a long exactly at the same price level and you expect a reaction to the long side. Alright, so whenever price shoots past the volume-based level like this, without any reaction, then you wait for a pullback, you wait for the price to come again to this level, and you enter a reversal trade, you enter a reversal position. So this is the first way how to trade the reversal trades. The second way is when you want to jump into a strong trend. As you can see in the picture, there's also a volume setup. In this case, it's a volume accumulation setup. Pretty heavy volumes accumulated in this area. And there is a strong trend right there. Without any pullbacks, the price just goes past the level in a strong uptrend. And in a case like that, you want to participate in the trend and you look for place where you enter the trade. In this case, where you enter a long position. So again, you wait for a pullback to the place where the heaviest volumes were placed in the market. In this case, it's exactly at this level. So you see the price went past the volume zone, then you wait for a pullback, and after that, from the same level, you enter a reversal trade, in this case, a long trade. This is how you participate on a strong trend. I need to say that you need to see some price action, some activity beyond your level. So you need to see some price action, for example, like this, above the level. Because sometimes it could just happen that the price goes past the level a little bit, then reacts to it and makes a reaction. So you don't want to take a reversal trade in a case like that. You need to see that the price accepted the higher prices in this case. So you need to see some price action above the level, then you need to see price to return to the level, and only after that you enter the trade. You don't enter a trade, for example, if the price overshoots the level 5 pips, then returns and you go long. No, you wait for confirmation. This is the confirmation. Let's say that, for example, if you trade intraday, the price needs to go 12 or 15 pips above the level, and only after that it is viable to take a reversal trade. Alright? Basically, you need to be sure that the price didn't respect the volume-based level. Alright, the third way to trade the reversal trades is to participate on a strong macro news movement. If you look at the picture, you can see this aggressive buying candle. This is a reaction to macro news. Obviously, you don't trade macroeconomic news. It's crazy to predict macro news, so you don't trade the news. See, no trade. But still, the level that you had prepared, this volume-based level, in this case it's based on volume accumulation setup, it's still viable to trade only as a reversal. So you don't trade the macro news, you don't enter a short from this area, but you wait for the price to return back to your volume-based level and you enter in the direction of the macro news reaction. So in this case, it is a long. You enter a long position from there. So you participate in the buying activity. You join the buyers, but you don't join them right there or right there, but you do it when the price returns to this level. You take a reversal from there. This is how you participate on macro news. You don't usually want to go against macro news candle like this one. This is a strong buyers pushing the price aggressively upward. So you don't want to go against them. That's why you don't enter a short. But you want to enter a long because you want to join them. Alright, I hope that makes sense. Now that I have showed you the 3 reversal trade scenarios, I would like to talk about the logic behind the reversal trades. You know, in my opinion, every strategy you trade should make sense and you should know the logic behind it. There are tons of strategies over the internet that tell you exactly what to do, what patterns to trade, what to do step by step. But if you really think about them, they just don't make any real sense. Those steps don't really make any sense. There is no logic in them. To me, it all seems like a bunch of random stuff, and random stuff doesn't work. So always look for logic behind each trading setup. The logic behind reversal trades is this. If you look at the picture, you've already seen this one, so let me demonstrate the logic on this picture.
Nếu không cần nói, đừng có nói, tao
Right
ghi
there
âm
you
nhé.
can see heavy volumes of strong sellers who accumulated their selling positions there, and after that they pushed the price downwards. Because they pushed the price downwards, you can tell that those volumes belong to strong sellers. When the price makes it back to this area, you expect that those sellers will start selling and that they'll push the price downwards to defend their positions. But in this case, the price didn't really respect this level and it went past it. What it means is that buyers are really strong, that at this place they fought against those strong sellers and they won. Which means that in this place, buyers won. Buyers are stronger than sellers. And the buyers who won the battle at this area will be defending this place, because this is a significant place, you can tell if you look at the volume profile. So when the price makes it back, those buyers won't let the price go below this point. They know that this is a significant place, so they'll push again and they'll defend this area, this price level, and they'll push the price upwards. And that's the logic behind reversal trades. Let's now have a look at the rules to trade the reversal trades. Rule number 1, price needs to go past the original level. And then there is rule number 2, don't take the reversals when original level worked partly, original level got tested a bit sooner, and reversal level got tested sooner. Now let me talk about those rules a little bit more in detail. Alright, so this is the rule number 1. I've already mentioned it, but let me repeat it so you have a complete set of rules. So this is a strong volume-based level, and this is a price action. Imagine that the price goes past the level, there should be S past. The price needs to go past the original level. And then it returns, and only then you can take the reversal trade. The price needs to go past the level. That's rule number 1. Next rule is don't take the reversal when the original level worked. So when there is a reaction to the original level, this is original level, when the price reacts to it as it should, then you don't trade a reversal. So if, for example, there is a reaction, then the price makes it past the level, then you don't take the reversal. You don't do it because the price already made a reaction to the level. Alright? The next rule is pretty similar. Don't take the reversal when the original level worked partly. This means that there was sort of reaction to the level. It wasn't really significant. Let's say that it was, for example, just 7 or 8 pips. But still there was a reaction to the level. So if there was, for example, 8 pip reaction to the level, then if the price goes past the level, then again you don't take the reversal. Alright? Because the price already made the reaction. It made a smaller reaction, but there was a reaction. So the level worked, and there's no point in trading the reversal. You only trade the reversal when the level doesn't get respected and the price goes past it. Another case where you don't take the reversal is when the original level got tested a little bit sooner. What it means is that the price approached the level, but it reacted a little bit sooner, let's say 1 or 3 pips sooner, and it made a significant reaction. So you can tell that this reaction was a reaction to this level. Alright, so when you see something like this, the level is already tested and you don't take the reversal. So after such a reaction, let's say that the price returns, goes past the level, this is the level, then returns, you don't take the reversal from there, because the level already worked only a little bit sooner, so you don't take the reversal. The last rule is don't take the reversal when the reversal level got tested sooner. What this means is when the price doesn't respect the level, it goes past it, and then you wait for a reversal. This is the level. You wait for a reversal, but a reaction occurs a little bit before the actual level. Let's say 1, 2, 3 pips sooner. Then it's already tested and the level is already spent, so you don't trade it anymore. So even if the price returns back to the level and actually touches it, you don't take a reversal, because the reversal got already tested right there. This is the reaction to the reversal. Alright? So that's it. Obviously, to trade the reversals like I do, you need the volume profile, because I trade reversals of strong volume zones, and you will find those volume zones only with volume profile. So you can get the volume profile from my webpage. I will leave a link to it below the video, so you can easily get it. I hope you like the reversal trade tutorial, and I'll be looking forward to seeing you in some next video, and until then, happy trading! In this video, I'll focus on confirmations from different trading setups, and also, very importantly, on seeing the big picture using long-term volume profiles. In this case, those will be the weekly fixed volume profiles, which will confirm the trading setups we will have, and which will basically show us how the big players see the market from the long-term point of view. So before you, this is the euro-dollar 30-minute chart. It's my favorite market. Volume-based strategies work very nicely on this market. So let's get to it. Let's have a look at some trading examples. Let's zoom the chart a bit. As I said, those profiles you can see in here or in here, those are fixed weekly profiles. They show us how the volumes were distributed throughout the whole week. Every week a new profile gets printed. Alright? So in this case, if you look at this buying activity right here, then you can see that there is a significant volume cluster right here. This is the trend setup, and as a confirmation of this trend setup, there are also those rejections of this general trading level, of this general area. So those rejections, which indicate that this zone was a resistance, now work as a support. The resistance became a support. So here is a confluence of resistance becoming support setup combined with the trend setup, this volume cluster created within this buying activity. Also, as the time was progressing, the volume profile throughout the week looked like this. The week wasn't completed yet, so those volumes still weren't there. Also, those volumes still weren't there. But this volume cluster was also visible on this weekly profile, which was forming by that time. Alright, so there was a volume cluster nicely visible on the weekly profile. Right here, on the flexible profile, we had those rejections marking resistance becoming support setup, and all this at this level. As you can see, those are multiple confirmations of this level, and you can also see how nicely the level worked afterwards. Alright, so that's how you use other setups as confluence to confirm your trading idea. Another interesting thing here are those heavy volumes combined with those rejections of this area. As you can see, those volumes are where the rejections occurred. And if you draw the profile over this whole rotation area, you can see that the heaviest volumes were in here, which worked as a strong support. Alright? This would be another nice trade based on combination of setups. Volume-based setup, this is the volume accumulation setup, combined with resistance becoming support setup. Alright? Both setups show us the same trading level, the same support. Now let's move forward. In here, there is strong buying activity. Right there. And you've probably noticed that those volumes, this volume cluster, I mean the peak of those volumes, is at the same level as the weekly point of control. This is the weekly point of control, meaning that the heaviest volumes throughout the whole week got accumulated in here. Also, if you look closely, you will see that price was rejecting this area in the past. So this was strong resistance zone, and when the price went past it, it became a support. So what we have in here is first, trend setup. Second, weekly point of control. Third, resistance becoming support setup. 3 trading setups confirming the same level, which is in here. This is the reaction to the level. It's around 12 pips, which is more than enough for take profit for intraday trading. Now, in here, on the weekly profile, you can see significant volume cluster created in this rotation. Let me also use the flexible profile, like this. So, in here, heavy volumes got accumulated. This is the trend setup. Market's going downwards, and this is a volume cluster created within a downtrend. So this is the trend setup, marking the level somewhere in here. Now, if you look in here, and if you use the Fibonacci tool, like this, then you'll see that it's basically the ABCD setup. This is the point A, this is the point B, this is the point C, and when the price hits this level, this should be the point D. Alright, so in this area, there is the D point from the ABCD setup. So not only we have the trend setup, the volume-based setup, but in this area, in this general area, we also have the ABCD setup, which confirms this general area as a strong resistance zone. You can see that the price is not really able to go past this zone when it finally touches the level based on those volumes and makes another strong rejection of the level. Another nice confluence of 2 trading setups. Now in here, there is a rotation followed by a selling activity. So this basically is the volume accumulation setup. So let's use the flexible profile over this area to see where the volumes were the heaviest. It's in here. And you can also see that not only the volumes are the heaviest in here, but also this level is very nicely visible on the weekly profile, which is a confirmation of the level. If there are heavy volumes on the weekly profile somewhere close to your level, then it's strong confirmation of the level. Alright, so this is the volume accumulation setup. This is the confirmation from the fixed weekly profile. And also there is the ABCD setup. This is point A, this is point B, this is point C, and this line is the D. So A, B, C, D, and from here you go short. Alright, so this is the ABCD setup. As you can see, confirms this area, this strong resistance area. So in this case we have three strong confirmations: volume accumulation setup, weekly profile confirmation, and ABCD setup, all pointing to this resistance zone. Now here is another significant zone. It is this rotation, this very long rotation, and it's again the volume accumulation setup. Also, volume is very nicely visible on the weekly profile, so this is definitely a very strong area. If you look at the whole profile, you can see that this is actually point of control of the whole week, meaning heaviest volumes of the whole week got traded in here at this level. So, heavy volumes accumulated in here, selling activity. This is the volume accumulation setup. And also, apart from that, there's also the ABCD setup. Again, A, B, this will be C, and this will be D. Alright, so the ABCD points a little bit lower, few pips lower, and as you can see, the price would actually make a very nice reaction to the ABCD setup in here. The volume setup is a little bit higher, the price would miss it. So you would miss the trade if you would try to enter at this level, but if you are trading using the ABCD, then you wouldn't miss the trade. You would have a winner from there. Alright, so another very nice confluence of the trading levels, pointing us to a very strong resistance zone. And actually there's one thing which I absolutely missed. This level was a support, and when the price went past it, it became a resistance. So this is another confirmation of the level. Alright, support becoming resistance setup. As you can see, we had many confirmations of this resistance zone. The more confirmations you get, the better. Now in here, there was a trend setup. There's an uptrend. Within the uptrend, there is a volume cluster in here. Let me draw a line in here. This would be the level based on the trend setup. You can also notice that there was a rejection of this area in the past, indicating that this level worked as a strong resistance. When the price went past it, the resistance became a support. Also, the level is very nicely visible on the weekly profile. It is a very important zone if you look at the weekly profile, alright? You can tell that this is one of the most important zones on this profile. Another one would be this one, and another one would be this one. So let's have a look how this level worked. Yeah, like a charm. You can see all those reactions to the level, showing us that the sellers had really tough time pushing the price through this support zone. Actually, the price bounced 3 or actually 4 times of this level. Now here is a nice case of the trend setup in here. The heaviest volumes formed in this buying activity got accumulated in here. And by that time, the price was going upwards in here. The weekly profile didn't look like this, but let me show you how it looked like, alright? Let's start from Monday, and let's end in here. The gray profile in here on the left side is the forming weekly profile. And as you can see, very significant zone was in here. Point of control was in here, but this was very close volume wise to the point of control. Really heavy volumes in here, which very nicely confirmed this level. As you can see, again, the price reacted this level very nicely. If, for example, I wasn't sure whether to take this level or not, I would just have a look at the weekly profile, and if I saw this, I would be sure that this would be a strong support. So the confluence would make me more sure about taking the trade. Now, another place where the weekly point of control would be extremely helpful in deciding whether to take trade or not would be in here. As you can see, this is basically a volume accumulation setup. It's heavy volumes from which strong buying activity starts. So heaviest volumes were in here. Right now you can tell that there was nice reaction to the level, so it's easy to see it now. But let's imagine you don't see that, and you need to decide whether to take the trade or not. The downside to this level is that here is a very weak low, and it's pretty risky to go against a weak low. But if you look at the weekly profile, you can see that this level lies exactly at the point of control of the whole week. The heaviest volumes throughout the week get accumulated here. And this thing should tell you that this level is definitely a strong level to go long from. This is nice confirmation of the level. So if I wasn't sure whether to take this long or no, this would make me take the trade. Alright? Now here is something you just need to trade. Extremely heavy volumes from which strong buying activity starts. This is a very strong case of the volume accumulation setup. For intraday trading, I would probably use it like this to look how the volumes got distributed before this buying activity started, right before it, and this little rotation, which would point me to this level. As you can see, the confirmation is here. This is the point of control of the whole week, lying basically at the same level as I would have from this area. So what happens next? The price goes back and reacts to those heavy volumes. So what's next? Now here is significant volume accumulation set up in here. If you look at the weekly profiles, you can tell that this is significant volume zone. This one, and this one. So if I draw the line here, this would be the place to consider going short from. The place where the volumes were the heaviest, alright? This is basically the volume accumulation setup. Heavy volumes followed by strong selling activity. So this indicates strong sellers building up their positions in here, afterwards pushing the price downwards. So you just wait for a pullback, go short from there. That's the standard volume accumulation setup. But if seeing heavy volumes on the weekly profile is not enough, then there is another confirmation which I can see, and it is the ABCD setup. This is the A, this is the B. From there, it goes to C, so ABC, and from C, it goes to D. So the ABCD setup points us to this level, which is a little bit below the original level we had, 5 pips below it. Alright, so it confirms the volume accumulation setup. As you can see also in this case, the level worked pretty nicely. There was nice reaction to it. Now the second significant volume cluster in this volume profile is this one. And let me use the flexible profile over this rotation area, which took place before this aggressive setting activity. And this is basically the volume accumulation setup, and you draw the line, the resistance line, in here, where the volumes were the heaviest. As you can see, this level is also very nicely visible on the weekly profile, which is very nice confirmation of the level. And as you can see, it was a strong one. The price reacted very nicely in here, then went even lower. Also, there was a test in here, so there were actually 2 tests of this strong resistance area. Let me see, maybe there was also the ABCD setup, I'm not sure. Yeah, it seems it is. It points us basically to the same trading level. A, B, C, D. So we have the volume accumulation setup, we have the weekly volumes, and we have the ABCD setup, all confirming this strong resistance zone. Now there is also the third significant volume zone, but in this case I don't really see any of the setups which I trade there, so I'll try to skip this one. But if you forced me to trade it, then I would move the profile like this to see where the volumes were the heaviest inside this rotation area. I would mark this level. I would wait until the price went below the level, and I would go short from there. It would be a losing trade. Then, as you can see, the price shot past the level, so I would take a stop loss. Afterwards, the price returned to the level, and I would take a long from there. I would take a reversal, and the reversal would be a winning trade. What also caught my eye is this rotation before this buying activity. Basically, this means strong support. This is volume accumulation setup, alright? Volumes accumulated within a rotation before start of buying activity. So this would be support, which would actually be nice bonus to the reversal, because I would take the reversal here with stop loss around 12 pips, so it would be somewhere in here. Oh wait, not there. It would be in here. The stop loss would be in here, not in here. This is 12 pips. So this would be the stop loss, and it would be below this support. So this would be actually another support standing in a way, helping to turn the price in my direction. Alright, so that's how I would trade this situation. So what's next is this rotation in here, and this is the volume accumulation setup. The level it marks is this one. As you can see, a little below it is the point of control of the week. So this is the confirmation of the level from the fixed weekly profile. As you can see, the reaction to the level was pretty sharp one, pretty quick one. Alright, so let's move forward a bit. And let's have a look at this area. Let me zoom it a bit for you. This is another case of the volume accumulation setup. You can see that there were heavy volumes accumulated before strong buying activity in here. So if I draw a line to the place where the volumes were the heaviest, it's in here. And actually, let me look at the previous week's volume profile. And what I want to have a look is at this whole area. So basically I will be merging this